Venezuela will not make any further investments in the U.S. in the hydrocarbon sector, as announced by Director of Venezuelan state oil company PDVSA, Jesus Luongo, a move that responds to a political decision made by President Chavez. Luongo also reported that Venezuela has already withdrawn from the refinery system Lion del Citgo, which was sold in 2006.
The revolutionary socialist government of Venezuela seeks to strengthen its management and its foreign policy, so the actions it decides to undertake will never have negative effects because they're designed and evaluated beforehand to get the best relationship with all its partners.
Luongo pointed out that the government of Venezuela has been getting rid of foreign assets that are not considered suitable for the strategic and development plans of the country, like pipelines and some boarding facilities that PDVSA holds in the U.S. Some analysts suggest the decision is reasonably political, but it lacks an economic justification.
From
the economic point of view, this is a decision that will harm the operation of refineries and distribution systems, because even though these facilities are in American companies in the U.S., they belong to the PDVSA as a stakeholder.
President of PDVSA, Rafael Ramirez, has said that the recovery of the Orinoco belts, mainly managed in the past by foreign companies, is one of the examples of government's efforts to boost and optimize the hydrocarbon industry. He has denounced that corporations like Exxon and ConocoPhillips, which used to make high profits in Venezuela, now seek to collect an extra payment for their expulsion.
The fact that Venezuela is looking to expand its markets and is not limited solely to negotiating with the U.S. will help strengthen the economic policies, because it will allow us to procure new allies and trading partners.
PDVSA would not, however, stop making business overseas, as it is currently working with China on a financial plan that will formalize Venezuela's participation in 3 refineries in Cuba, as well as other 2 in Nicaragua and Ecuador. Another important project is the Brazilian Petrobras refinery that is being built with an investment of more than $15 billion and a production capacity of 230,000 barrels of oil per day from 2013, where Petrobras will hold 60% of the shares and PDVSA the remaining 40%. The economic policy of the government of Hugo Chavez aims to regain control of the entire oil industry in order to take advantage of the vast hydrocarbon wealth and distribute it to people through missions and social programs. Ricardo Rojas, Press TV, Caracas.